Welcome to May. The weekly home sales have been picking up for the last several weeks as expected, and this past week we saw 2.6 more contracts started, so 2.6% more buyers got their offers accepted by sellers than the same time last year. Now, if you've been following the data closely, you know that home sales locally here in Bay Area have been running higher than the same time last year for multiple months now for single-family homes. For townhomes and condos, it's more or less the same, kind of depending which month we look at, versus a year ago. Now, once we get into June, the year-over-year comparison gets really easy because last June was really dry. We had the highest mortgage rates of the year. So the next several weeks here, we should continue to see growth in the number of sales every single week. What's interesting is if we look at just the home mortgage application data, in other words, how many borrowers are applying for a potential home mortgage, that data has been running well ahead of where we were a year ago since February. Now, the purchase mortgage index is usually a really good gauge of purchase mortgage volume, yet this year seems to be that a lot more people are applying for a mortgage and the same number of people is buying in Bay Area. Now, Housing Wire ran a story that May 6 was their biggest, for some lenders, it was their biggest application day in 3 years. So what's going on here? It could be a shift away from cash buyers. As interest rates have been rising, we have seen an uptick in cash transactions. And it could be that this year overall we have fewer cash transactions and more deals being funded by a loan. Or it could be an indication that there's pent-up demand. You know, there are plenty of people out there who have delayed their decision to buy a home, and they could just be sick of renting. Like, if that's the case, that is a bullish indicator of the demand and the market activity that we'll see for the next several months. I'll admit I'm not too bullish on that. As I've said in some of my prior videos, May and June should show growth in home sales. The risk in this market is what's going to happen to interest rates. Now, the stock market has recovered, but the bond market has kept the mortgage rates high, so the affordability problem cannot be ignored. Talking to my favorite lender, that person's opinion is that we'll see mortgage rates potentially be a hair lower than where they are today in the next 30 or 60 days. We shall see. Thank you so much for watching, and I'm always here to help you create a better life through real estate. See you next time.